Let's take a look at some potentially high-quality, undervalued dividend stocks with promising future returns. I'm going to run through the stocks first. Then I'll explain why I'm looking at these stocks opposed to others. And we'll wrap up by taking a closer look at each of them. Okay, the stocks on our list today are American Tower Group, ticker symbol AMT, with a yield of 3.28%. Merck, ticker symbol MRK, with a yield of 3.96%. Restaurant Brands, ticker symbol QSR, with a yield of 4.01%. NextEra Energy, ticker symbol NEE, with a yield of 3.35%. PNC Financial, ticker symbol PNC, with a yield of 3.99%. Comcast, ticker symbol CMCSA, with a yield of 3.75%. State Street, ticker symbol STT, with a yield of 3.69%. ConocoPhillips, ticker symbol COP, with a yield of 3.41%. Essential Utilities, ticker symbol WTRG, with a yield of 3.45%. Genuine Parts Company, ticker symbol GPC, with a yield of 3.61%. Pepsi, ticker symbol PEP, with a yield of 3.72%. Xcel Energy, ticker symbol XEL, with a yield of 3.32%. Omnicon Group, ticker symbol OMC, with a yield of 3.66%. Sempra Energy, ticker symbol SRE, with a yield of 3.79%. And Cisco, ticker symbol SYY, with a yield of 2.87%. So now, the important question, why these 15 stocks and not others? Well, in my opinion, when you're looking for dividend stocks to invest in, you should start by looking at three different things. The first thing, is it a quality company? The second thing, is the stock attractively valued? And the third thing, does it have a promising future return? So now let me explain my process for finding stocks that fit all three of these conditions. It all starts with the screening process. I use Charles Schwab's stock screener to look for stocks that meet all of these criteria. A minimum dividend yield of 2.75%. The stock must trade on the New York Stock Exchange or the Nasdaq. It must have a payout ratio of less than 100%. Its 5-year dividend growth rate must be positive. It must have a market cap of at least $10 billion. A wide or narrow economic moat from Morningstar. A standard or exemplary stewardship rating also from Morningstar. A B or better S&P quality rating. And it must also have a positive 5-year revenue growth rate and 5-year earnings per share growth rate. Now typically when I run this screener, I get about 20 to 30 stocks each month. When I ran this stock screener for April, it found 36 different stocks. I then further review these stocks to figure out which ones are of higher quality, which ones are potentially undervalued, and I come up with my top 10 stocks for each month. I share this list at the beginning of the month with my Patreon and Substack community. What you're seeing here is the newsletter that I sent out at the end of the month to all my paid subscribers. It includes the top 10 stocks for my screening process. In addition, I share the full Excel file in the newsletter as well. My paid newsletter subscribers, as well as my Patreon members, have access to a live tracking sheet for all of these stocks. They can access this tracking sheet in the paid member benefits section. And they are able to see the spreadsheet that we were looking at in the beginning. The spreadsheet is updated live anytime the market is open. The price data is provided by Google Finance. The fair price and valuation is updated by me every weekend. The forward dividend yield is updated anytime the price changes, and dividend increases are announced. The stock rating and the expected rate of return are also updated live. The valuation is measured using dividend yield theory, and we'll get into that in a little bit. And the expected rate of return is a combination of three components. It is the sum of the forward dividend yield, a 3 to 5 year earnings growth forecast with a margin of safety, and a potential return to fair value based on the valuation. The stock ratings are pretty simple. If a stock is potentially undervalued and has an expected rate of return of at least 10%, it is rated as a strong buy. If a stock has an expected rate of return above 10%, but is not potentially undervalued, it has a buy rating. And if a stock has an expected rate of return below 10%, it is a hold. You can think of this as a curated short list of stocks that may be opportune investments at the moment. Let me jump back over to my spreadsheet, and we can take a closer look at each of the dividend stocks. I'm going to pull them up one by one, and we'll start with American Tower Group, ticker symbol AMT. The stock currently trades for about $207, and based on dividend yield theory, it's fairly valued at $255, implying a potential 19% undervaluation. The company's forward dividend rate of $6.80 gives them a 3.28% forward dividend yield, which is about 19% higher than the 5-year average trailing dividend yield of 2.66%. American Tower Group has a pretty attractive potential expected rate of return of 19.31%. This is a combination of the forward dividend yield of 3.28%, a 3 to 5 year earnings growth forecast of 16.65% with a 25% margin of safety, and a potential return to fair value of 3.54%. The potential return to fair value is simply the undervaluation annualized over 5 years. We can further see here that American Tower Group has a pretty strong track record of dividend growth, with the last 11 years all seeing dividend growth above 10%. If we take a look at the valuation chart, the actual share price is the black line. The fair price based on dividend yield theory is the green line. The blue line is a 15% discount to fair value, and the red line is a 15% premium to fair value. And this chart shows me how attractively valued American Tower Group has been during the last 7 years. We can see that in 2019, 2020, and 2021, the share price trended pretty consistently along the fair value price, climbing above and below the green line, giving us more and less opportune entry points. And since 2022, pretty much through today, it has consistently stayed below the green line, indicating that the stock is potentially attractive. In the lower chart, we can see the dividend yield history for the last 7 years, as well as the rolling 5-year average. And what this chart can tell us is that the dividend yield for American Tower Group hovered around 2% from 2018 through 2022. Then it started climbing higher, pushing above 3% and even topping 4%, with a little bit of volatility since late 2023. So overall, American Tower Group looks like a pretty good dividend grower that appears potentially undervalued today and has a pretty strong expected rate of return. Let's move on to Merck, ticker symbol MRK. The stock currently trades for about $82, and dividend yield theory is giving us a fair price of $107, implying a potential 23% undervaluation. The forward dividend yield of 3.96% is almost a full 1% above the 5-year rolling average of 3.04%. We can see that Merck has a pretty mixed history of dividend growth, with a few good years, a couple average years, and some sour years. The valuation chart shows us that between 2018 and 2023, Merck has actually pretty consistently followed its dividend yield theory valuation. Then in 2024, the share price moved above our premium zone, and since the middle of last year, it's been on a downfall. More recently, pushing below our 15% discount zone. From the dividend yield chart, we can see that Merck's yield today is at its highest level in the last 7 years. The expected rate of return for Merck stands at 17.59%, and this is made up of a pretty strong forecasted earnings growth, a forward dividend yield just shy of 4%, and a potential return to fair value of also 4%. Stock number 3 on our list is Restaurant Brands, ticker symbol QSR. Restaurant Brands currently trades for about $62, and dividend yield theory is telling us its fair price is $72, implying a potential 14% undervaluation. The stock offers a forward dividend yield just above 4%, that is about 60 basis points above its 5-year rolling average of 3.44%. Restaurant Brands has a pretty short track record of dividend growth that started out very strong, but since the pandemic it's slowed down quite a bit. And the expected rate of return stands at a pretty nice 14.9%. The next dividend stock on our list is NextEra Energy, ticker symbol NEE. The stock currently trades for $67.58. And dividend yield theory is telling us its fair price is $94, implying a potential 28% undervaluation. The forward dividend yield of 3.35% is almost a full percent above the 5-year rolling average of 2.42%. NextEra Energy has a very strong track record of dividend growth, with the last 9 dividend increases all being above 10%. It also offers one of its highest yields in the last 7 years today, and the expected rate of return is a pretty nice 14.61%. The next stock on our list is PNC Financial, ticker symbol PNC. The stock currently trades for $160, and the fair price based on dividend yield theory is $175, implying a potential 8% undervaluation. The forward dividend yield is just shy of 4%, and it's about 32 basis points above the 5-year rolling average dividend yield of 3.67%. PNC has a mixed history of dividend growth, with a handful of average dividend increases and a few pretty spectacular ones mixed in. From the valuation and dividend yield chart, we can see that the two most opportune entry points for PNC were March of 2020 during the pandemic and shortly thereafter, and once more in 2022. During both these time periods, PNC sported a forward dividend yield above 5%. We can see that the latest market volatility has pushed PNC share price almost to our 15% discount zone. The stock also has a pretty nice expected rate of return of 14.49%. The next stock on our list is Comcast, ticker symbol CMCSA. Comcast currently trades for $35, and the fair price based on dividend yield theory is $52, implying a potential 32% undervaluation. It sports a forward dividend yield of 3.75%, that is a full 1% higher than its 5-year average of 2.56%. Comcast has a pretty decent track record of dividend growth, but we can see that it's been cooling off, dipping below 10% in 2020, and marginally declining further since then. From the dividend yield chart, we can see that Comcast offers one of its best dividend yields in the last 7 years today, and it has an expected rate of return of 14.22%, which is pretty nice. The next stock on our list is State Street Corporation, ticker symbol STT. The stock currently trades for $82, and the fair price based on dividend yield theory is $94, implying a potential 12% undervaluation. The forward dividend yield stands at 3.69% and is about 50 basis points above the 5-year average of 3.24%. State Street has a pretty good track record of dividend growth, with a handful of dividend increases above 10% and a few average ones mixed in. Its current expected rate of return stands at 13.7%. The next stock on our list is ConocoPhillips, ticker symbol COP. The stock currently trades for $91.50, and the fair price based on dividend yield theory is $115, implying a potential 20% undervaluation. It is a forward dividend yield of 3.41% that is about 70 basis points higher than its 5-year trailing average of 2.7%. The company has a pretty mixed history of dividend growth, but it has had a few pretty phenomenal dividend increases, like 26.59% in 2020 and 38% last year. The expected rate of return for ConocoPhillips currently stands at 12.95%. The next stock on our list is Essential Utilities, ticker symbol WTRG. It currently trades for just shy of $38, and the fair price based on dividend yield theory is $48, implying a potential 21% undervaluation. The forward dividend yield of 3.45% is 75 basis points higher than the 5-year rolling average of 2.7%. The company has a pretty steady track record of dividend growth, consistently increasing its dividend by about 7% per year, and its expected rate of return stands at a pretty nice 12.27%. The next company on our list is Genuine Parts Company, ticker symbol GPC. The stock trades for about $114, and the fair price based on dividend yield theory is $147, implying a potential 22% undervaluation. The forward dividend yield of 3.61% is 81 basis points higher than the 5-year rolling average of 2.8%, and the expected rate of return stands just shy of 12%. The next stock on our list is Pepsi, ticker symbol PEP. Pepsi currently trades for about $145, and the fair price based on dividend yield theory is $186, implying a potential 22% undervaluation. The forward dividend yield is pretty nice at 3.72%. Which is one of the highest yields Pepsi has offered during the last 7 years. It also has a pretty good expected rate of return of 11.23%. The next stock on our list is Xcel Energy, ticker symbol XEL, and it currently trades for about $68.58, with the fair price being $74, implying a potential 7% discount. The forward dividend yield for Xcel Energy is 3.32%. Which is 26 basis points higher than its 5-year rolling average of 3.06%. The company has maintained a pretty steady dividend growth rate, right around 5 to 6% per year, and it has a pretty good expected rate of return of 11.02%. The next stock on our list is Omni Group, ticker symbol OMC, and it trades for about $76.50, with the fair price based on dividend yield theory being $84, implying a potential 9% undervaluation. The stock has a forward dividend yield of 3.66% that is about 30 basis points above its 5-year rolling average of 3.35%, and it has an expected rate of return just above our threshold at 10.6%. The next stock on our list is Sempra Energy, ticker symbol SRE. and it trades for about $68, with the fair price based on dividend yield theory being $80, implying a potential 15% undervaluation. The forward dividend yield of 3.79% is about 0.5% higher than the rolling 5-year average of 3.23%, and the expected rate of return stands at 10.5%. And the last stock on our list is Cisco, ticker symbol SYY. It trades for about $71, and dividend yield theory is telling us a fair price for the stock is $78, implying a potential 9% discount. It has the lowest forward dividend yield of all the stocks we looked at today at 2.87%, but that yield is still 26 basis points above its 5-year rolling average of 2.61%. And Cisco just marginally exceeds my minimum expected rate of return threshold of 10%. There you have it, 15 potentially high-quality, undervalued dividend stocks with promising future returns. If you'd like to have access to this live tracking sheet and receive my dividend stock analysis at the end of each month, you can check out my Patreon and my newsletter, Quality at a Fair Price. Links to both can be found in the description below. If you enjoyed the video, please give it a like and subscribe to the channel. Thank you for watching and see you next time.